Margaret is 71 years old. She has been receiving Social Security for 6 years. Every month, same amount, same date, no problems. Last spring, she moved into a smaller apartment to save money. She called her daughter to help pack boxes. She updated her address with her doctor. She even called Medicare. But she forgot one thing, one tiny thing. She forgot to update her address with the IRS. 3 months later, a letter arrived at her old apartment. Her new neighbor did not know her. The letter sat there, uncollected. Inside that envelope was an IRS notice about a discrepancy on her tax return, a discrepancy that required a response within 30 days. Margaret never saw it. The 30 days passed. The IRS treated the silence as non-response and automatically assessed what they believed she owed, plus penalties, plus interest. By the time Margaret found out, the amount had grown from a manageable correction into a financial emergency that took 8 months and significant stress to fully resolve. One address, not updated in one place. That is all it took. And here's the thing that should concern every single person watching this right now. Margaret's story is not unusual. It is not rare. Across the United States right now, there are seniors whose IRS records say one thing, whose bank records say another, and whose health records contain information that does not match either. Most of them have no idea. And in 2026, with expanded data matching between federal agencies, stricter bank verification rules, and Medicare records being cross-referenced during eligibility reviews, those small inconsistencies are being caught faster than ever before. The question is whether they get caught by you first, or by a system that does not give you a warning before it acts. Subscribe right now and hit that bell so updates like this reach you first. Leave a like if this matters to you, and drop a question in the comments below. I read every single one. Now let us walk through exactly where these costly mistakes are hiding, because most of them are smaller than you would ever imagine. Let us start with the IRS, because tax mistakes among seniors are happening at a rate that tax professionals across the country are calling genuinely alarming this filing season. And the reason is not that seniors are careless. The reason is that 2026 is genuinely a different tax year with new rules that most people have not been told about clearly enough. Here is a real scenario that is playing out in tax offices right now. A 68-year-old retired teacher, we will call him Robert, sat down with his tax software in February. He has filed his own taxes for 40 years. He knows what he is doing. He enters his Social Security income, his small pension, his interest from savings. He takes his standard deduction like always. He hits submit. Done. What Robert did not know is that a new $6,000 senior bonus deduction exists for anyone 65 or older this year, a confirmed benefit from the One Big Beautiful Bill Act signed into law in 2025. It stacks on top of everything Robert already claimed. It could have reduced his taxable income by $6,000. At his tax bracket, that translates to real cash savings. But Robert never heard about it. His software did not catch it because he did not enter the information triggering it correctly. He filed without it. That money, his money, went to the government instead of staying in his bank account. That is not a dramatic penalty story. That is simply a senior who did not know a rule existed, and it cost him. Tax professionals confirm that this specific mistake, failing to properly claim the new senior deduction, is one of the most common errors they are seeing corrected this filing season. The IRS itself flagged it as a primary concern for senior filers in 2026. But the mistakes go further than missing deductions. The National Taxpayer Advocate's annual report confirms something that catches people completely off guard. Unpostable tax returns. Returns that the IRS cannot process because the information does not match their records happen regularly. And the most common trigger is something as simple as a name mismatch. A woman who recently widowed and filed under her deceased husband's last name out of habit. A senior whose Social Security number is entered with a single-digit transposition that has never been caught. A return where the name on the filing does not match the name in the IRS database because of a marriage, a divorce, or a simple clerical error from years ago. These returns get flagged, they get delayed, and if you do not respond to the notice that follows, because you never received it or because you did not understand it, the problem compounds. Now let us talk about your bank records, because this is where seniors are being surprised in a way that feels deeply unfair. You have been banking at the same institution for 20 years. You trust them, you know the teller by name, and you have absolutely no reason to think anything about your account could create a problem. But here is what is actually happening inside the verification systems at financial institutions right now. Banks are applying stricter identity matching protocols to incoming deposits, particularly federal benefit payments. The name on your bank account must match the name in the SSA's records precisely, not approximately, not close enough, precisely. A middle initial present on one record but not the other. A hyphenated name that appears with the hyphen in one system and without it in another. A maiden name on a bank account opened 40 years ago that does not match a married name in a federal database. Consider Patricia. She is 74 and has been receiving her Social Security retirement payment by direct deposit for 9 years without a single problem. Last year, her bank updated its verification systems. Her account was opened in 1987 under her maiden name, Patricia Hendricks. Her SSA record shows her current legal name, Patricia Morrison. The system flagged the mismatch. Her February payment was held for review. She did not get a notification from her bank. She just woke up on the day her payment was supposed to arrive, and her account showed nothing. She called the bank. They told her there was a verification hold. She called the SSA. They told her the payment had been transmitted successfully. 3 business days passed, then 5. It took 11 days and 2 in-person visits to resolve what amounted to a name discrepancy that Patricia had not even known existed. 11 days with no income. For a senior on a fixed budget where every dollar of that monthly payment is already allocated, 11 days is not an inconvenience. It is a crisis. The health records piece of this story is the one that surprises people most, because most seniors never think of their medical history as something that could affect their finances. But in 2026, it absolutely can, and here is exactly how. Medicare uses your health records to determine what services are covered for you, what your risk classification is, and what supplemental benefits your plan is authorized to offer you. If your health records contain errors, and medical billing errors are far more common than the healthcare industry publicly acknowledges, those errors can affect your coverage determinations, create unexpected out-of-pocket costs, and in some cases trigger Medicare reviews that delay or complicate your access to benefits. Think about Dorothy. She is 70 and enrolled in a Medicare Advantage plan. 2 years ago, she went to urgent care for severe indigestion. The billing clerk entered the wrong diagnosis code, the code for a cardiac condition rather than a gastrointestinal issue. Dorothy was told it was nothing serious and sent home. She never thought about that visit again. But that incorrect billing code was transmitted to her compiled health data profile. When her Medicare Advantage plan reviewed her health risk classification this year, that cardiac code appeared. Her risk profile was elevated. Her plan began flagging her for cardiac care management outreach calls she did not understand. When she tried to access a specific specialist referral, the plan's system required additional authorization because of her supposedly elevated cardiac risk, a risk that existed only because of a billing clerk's typo 2 years earlier. Dorothy has been navigating that correction process for 3 months, not because she did anything wrong, because one wrong code entered by one person in one system quietly changed how her healthcare coverage was managed. Here is what you need to do right now. Because every one of these scenarios is preventable with a small amount of proactive attention paid to the right places. First, check your IRS records. Log into your IRS online account at irs.gov and verify that your name, address, and social security number on file match your current legal information exactly. If you have moved in the past year, make sure the IRS has your current address, not just your bank and not just the SSA. The IRS is a separate system that requires a separate update. Second, for this tax filing season, confirm that your tax software or preparer is applying the new $6,000 Senior Enhanced Deduction through Schedule 1A if you are 65 or older and your income is below the phase-out thresholds. Ask directly. Do not assume it is being caught automatically. Free help is available through the IRS VITA and TCE programs at no cost to seniors who need assistance filing correctly. Third, call your bank and ask a representative to confirm that the name on your account exactly matches the name associated with your incoming Social Security or benefit payments. This conversation takes 10 minutes and could prevent the kind of payment hold that Patricia experienced. If there is any discrepancy between your bank account name and your SSA record, address it now, not after a payment fails to arrive. Fourth, request a copy of your Medical Information Bureau consumer file, your compiled health data profile, and review it for errors. You are entitled to one free copy annually. Look specifically for any diagnosis codes that do not match your actual medical history, and work with your healthcare providers to correct any errors you find. Here is the honest picture. None of the mistakes in this video involved fraud. None involved intentional wrongdoing. Every single one was small. A forgotten address update, a missed deduction, a name entered slightly differently in two different systems, a billing code entered incorrectly by someone else. These are not the kinds of errors that feel important in the moment. They are exactly the kind that get ignored until a system somewhere catches them and acts on them, and by then, the consequences are already underway. The protection is simple. Verify your name and address across IRS, SSA, and bank records. Confirm your senior deduction is being claimed correctly. Check your health record for billing errors. Do these things once. Do them now, and you will have closed the gaps that catch people completely off guard every single year. One last reminder before we go. Scammers know that people are anxious about records mismatches, and they exploit that anxiety directly. If anyone calls you claiming they have found an error in your IRS, bank, or health records, and that you must pay a fee to fix it, hang up. No government agency and no legitimate institution resolves record errors by phone for a fee. Report suspicious contacts to the IRS at 1-800-366-4484. Your records are your financial foundation. Make sure they are telling the truth about you. If this video opened your eyes to something you need to check, please share it with someone you care about right now. Subscribe and turn on notifications, because these are exactly the kinds of updates that protect real people from real financial harm. Leave a like and drop a comment telling me which one of these three areas concerns you most: your IRS records, your bank records, or your health records. I read every single comment, and your answer helps me know what to cover next. Thank you for watching, and I will see you in the next update.